Hi, everybody. We're going to get started in just a few moments.
Okay, let's just get going.
Hello, everybody. Welcome to the TBR webinar series. Today, Principal Analyst Boz Hristov, Senior Analyst Elitsa Bakalova, Senior Analyst Lesiczka, and Analyst John Croll will be discussing digital transformation amplifies IT services market trends, insights from TBR's professional services team. Before we get started, just a few housekeeping notes. At the bottom of your screens, you'll see a series of buttons. From left to right, you can access the slides, audio controls, Q&A, the speaker bios, a survey, information on the next webinar in our series, including a registration link, an exclusive free trial offer for folks on the webinar who are new to TBR, and a related content widget where you can download the slide deck from today and access other materials. These buttons on the bottom of the screen allow you to minimize each window to customize your webinar viewing experience. You can also maximize the slides if you wish to view them in full screen. After the webinar, you'll receive an email with a replay link, as well as a link to view and register for other TBR webinars. If you have any questions for us, please submit them via the Q&A widget in On24. You may also reach out to us after the event at webinars@tbri.com. Thank you again for joining us, and here is Boz to begin the webinar.
Thank you, Haley, and good afternoon, good morning, good evening, everyone. Thank you very much for joining us today. For today's webinar, as the topic, as the headline was suggesting, it's really about the intersection between digital transformation and IT services. Certainly, both important areas as part of our research, and we wanted to kind of highlight a few of the findings that we have, that have come up over the last quarter from our research. So today's topics are really about, it's going to go over the IT services benchmark and the findings that research produces, and she'll highlight some of the key trends across the IT services research. The second topic is around verticals, and this is something new. And what I mean by that is many of you that have been attending our webinars in the past and know TBRs from being clients, we are really focused on vendors, and service lines have been kind of the core of our discussion and core of our modeling efforts and core of our analysis. But as from this quarter, we started to adding modules to our IT services benchmark, and the modules will be rotating. We'll be having modules on industry verticals, on geos. And we started with the first module was on manufacturing, one of the hardest hit verticals, and we're going to dive a little deeper into manufacturing. We'll provide some analysis and speak about what's going on in that vertical and how it ties into the vendor's go-to-market strategy. So that's the second topic. And the third and the fourth topic are really about digital transformation and kind of the wrapper around many of the discussions and the topics that we're going to talk about earlier in the deck. So the first one, we're going to highlight some of the buyers, enterprise buyers. What are the expectations? How are they thinking about what's next, basically, for them when it comes to digital transformation? Many, continue to, battle the headwinds from COVID-19, but we're certainly seeing some resurgence in opportunities. And this is the fourth topic where we're going to highlight some of the, where are those pockets of opportunities? How are the markets rebounding? Where do we see short and long-term opportunities for digital transformation that are pegged against the numbers as part of our research, as well as some of the new areas that we are starting to see vendors investing. So broad topics for discussions, a lot to cover. So without further ado, I'll turn it over to Elitsa. Next slide, please. I'm sorry.
Thank you, Boz.
Sorry, I should have said these are the reports we're going to cover today. I forgot about to mention, but so as part of that overview research, the 5 reports we're going to talk about today is IT Services Benchmark, Digital Transformation Customer Research that I mentioned, Digital Transformation Industrial IoT Market Landscape, Digital Transformation Analytics Benchmark, and Digital Transformation Digital Marketing Services Benchmark. So all these reports will be part of the discussions today. So again, Elitsa, over to you.
Thank you, Boz. We published the latest IT services vendor benchmark in June, and I want to spend some time to highlight the 3 key trends that we identified in the report. The first trend is about vendors' push to expand in new areas of growth. Cloud and cybersecurity, they have been the core levers for digital transformation in the past year, and they still remain, and they're accelerating their growth. And it still remains a client interest. And it's something that happens as a result of the pandemic. But we're also seeing that vendors are looking for other ways to diversify their portfolios and to expand in new areas, such as sustainability services, product engineering, blockchain, and supply chain optimization. We're seeing increasing activity in such new areas of growth in terms of launching new offerings, making acquisitions, and forming alliances. And, you know, some examples in terms of active vendors in the space, but they're just key highlights. Accenture and Capgemini expanding in product engineering and R&D services. Atos, Accenture, Capgemini, and IBM are good examples in sustainability services. Across the board in the multinational and the India-centric companies, we're seeing supply chain resiliency and optimization as a core lever for growth, especially intensified by the pandemic. The second trend in our analysis was the topic of acquisition. Consolidation in the IT services industry has been going on historically, and we have seen multiple large-scale and smaller-scale transactions throughout the years. But a notable trend in the past year and in the past 2 quarters was the increased number of small to mid-sized acquisitions that vendors in the IT services space are making to expand specialized skills and to supplement their portfolios. The skills that vendors gain, they range from industry specialized expertise, data and AI-related capabilities, skills around partner technologies such as Salesforce, Google Cloud, SAP, and also consulting and implementation resources. Just want to highlight a few vendor examples. Accenture has been very active on the acquisition space. It made 39 acquisitions over the past 9 months, spanning in areas such as cloud, HR transformation, product engineering, operations, and interactive. IBM announced 11 acquisitions since 2H20, 8 of which are directly tied to IBM Global Business Services, which will remain in IBM's scope after the spin-off of the managed infrastructure services activities into a new company, Kyndryl, at the end of 2021. So through those acquisitions, IBM continues to develop global business services capabilities to support its strategy around expanding hybrid cloud and AI and to facilitate technology-enabled transformations utilizing advisory systems integration and application managed services. And the last example, since May 2020, HCL, TCS, Wipro, Infosys, and Cognizant have closed or announced plans to acquire 24 firms, as their peers across the landscape are also committing to M&A and integrating recent acquisitions. And the third trend is about talent development. During the pandemic, vendors invested in developing digital skills across the resource pools, such as increasing the number of certified resources for solutions provided by hyperscalers expanding data and cybersecurity skills. But over the past year, we saw attrition decrease significantly, which reflects the fact that employees were very cautious during the pandemic, and they were discouraged to seek jobs from and explore the market. And this actually enabled vendors to reposition their resource management commitments to better focus on training, reskilling, and career development, and the well-being of all employees. Now, as the pandemic pressures are starting to alleviate with the rollout of vaccines, we're seeing attrition levels ramping up. High productivity rates with related increased utilization over the past year and digital burnout for some of the employees are also factors that are driving the spike in attrition. And specifically in 2Q21, we saw multiple companies report increased attrition levels. Accenture is one good example. For Accenture, utilization reached 93% in 2Q21, which is higher than the 88% utilization in 2Q20. And then the related attrition increased 600 basis points to 17% in 2Q21. So there's a definite correlation between increased utilization and increased attrition. So managing staff in a post-pandemic world might prove to be the biggest hurdle for vendors to be able to capture pent-up demand for digital transformation services. Now I want to turn it over to Kelly to tie the trends with numbers.
Thanks, Elitsa. So looking at this slide, we wanted to give a good view of revenue performance throughout 2020 and thus far into 2021 and what that means moving into 2022. So the first thing I wanted to call out here is the revenue figures for 1Q21. While the revenue did increase from the prior quarter, it went up slightly to 0.6% growth compared to the year ago. In 1Q20, it's actually decelerated since then. A lot of the vendors are still experiencing some of those growth pressures from the pandemic that have impacted their ability to generate revenue. Looking through some of the delivery efforts, some of the shifts around talent and the way that they deliver services have kind of impacted their ability to continue to deliver those services and generate revenue. A lot of the areas too have returned from lockdowns, or the conditions are not as open for the vendors to operate as normal, and they're slowly shifting back into the on-site or using more of that hybrid model, which has also impacted their ability. The pandemic did serve as a catalyst to kind of increase their clients' digital transformation activities, particularly around cloud and data-enabled solutions, employee and user experience, as well as cybersecurity. Some of the vendors had been more acquisitive. They had invested a bit more into their portfolio and their talent throughout 2019 and at the beginning of 2020, and they were better able to withstand some of those pressures as they had stronger infrastructure, stronger placement, as well as portfolios that aligned better with the needs that their clients were shifting into. Vendors that had invested in the business models as well to leverage more efficient cost structures, as well as pushing forward into a lot of the emerging technology areas such as cloud and digital, they were better able to withstand a lot of those pressures. Some of the vendors that were under transition and kind of looking to transform their business models later on, or they had been undergoing some of those longer term transformation projects, they needed to catch up to demand among their clients that was changing due to the market, as well as their own positioning, as well as some of the moves that their peers were making in the market. They were trying to make those internal transformations, but they were also looking to address some of the cost structure challenges, and so they were not as successful in combating those pressures and experienced sharper revenue declines than others. A few of those vendors were DXC and T-Systems. The development and establishment of cloud practices, including those that are dedicated to technology partner capabilities such as Microsoft, Google Cloud, and AWS, Those practices helped vendors to better guide their clients through cloud and application migration projects during the pandemic. They had stronger capabilities to actually migrate, provide those services, as well as the talent to work closely with their clients to facilitate the shift and make sure that they were implementing and managing solutions that were best fit for particular situations. And they also helped to shift the way that their clients delivered business. Successful guidance during the pandemic through these cloud practices helped the vendors capture new managed services opportunities, as well as continue those transformation projects as the market conditions and their clients' financial situations had improved. Investments in technology-driven solutions such as cloud, AI, cybersecurity, and blockchain also helped contribute to some of the alleviation within growth pressures. So deepening technology expertise through additional experts and architects that were more centered around innovation and design helped to expand their portfolios more rapidly and to bring out different offerings, as well as to establish use cases that drove into new engagements, as well as helped to drive additional value for clients. One other area I wanted to call out in looking at 1Q21 performance was around APAC. APAC revenue did lead the growth for vendors. It was primarily due to increased demand around IT infrastructure and application modernization. The region recovered the quickest from the pandemic pressures in 1Q21 relative to EMEA and the Americas. Further investment from the vendors in talent and as well as some delivery centers across the region, both remote and on-site staff, will support this trend and kind of help them to continue revenue through 2021 and into 2022. Shifting to the outlook, TBR expects that the revenue will accelerate into 2020 at the end of 2021. Where it declined in 2020, we're expecting mid to single-digit growth in 2021. A lot of the activities through 2020 and some so far at the beginning of 2021, a lot of it was still centered around pandemic response, but that's starting to taper off as we move into the second half. And vendors that have used the opportunities to invest in their talent and their portfolio will be better suited to continue these digital transformation projects and move their revenue ahead of their IT services peers. Leaning on innovation-oriented strategies to enable new ways of working will also help the vendors to drive value for clients. I think something else that I kind of touched on a bit before too was around the employee experience. I know customer experience is very a stronger area now for vendors too, as their clients are looking to improve experience on their end for their own users. But employee experience has also changed a bit, as during the beginning of the pandemic, a lot of the efforts were centered around keeping their employees safe, making sure that they had the resources needed. I think that trend is continuing now, especially as a lot of the competition for talent has picked up, ensuring that their talent has a growth path and they're getting the training and the support and the cultural elements too that they need, particularly as we operate in a hybrid world. That will become increasingly important as they move into 2021. Internal disruption also had kind of slowed a little bit during the pandemic, as they were focused more on run the business and kind of shifting to a digital environment. But returning to a more normal environment, we will likely see a lot more of the internal disruptions, new business models established, as well as vendors looking to capture new market opportunities through that innovation, either with clients or with partners. So moving on, I'll hand it to Boz to go into some of the specific vendor performance.
Thank you, Kelly. And I think we skipped this. There we go. Perfect. Yeah, as many of you have seen that slide before, famous TBR's bubble graph. I really want to kind of highlight a couple of vendors that I closely cover, and each one of us will go and kind of contrast and compare some of the leading and lagging vendors. But a couple of vendors I want to call out here. Accenture's name was mentioned on a couple of occasions. Certainly, it is standing out. I mean, they are the largest revenue largest vendor in terms of revenue size, and it's among the fastest growing vendors. Accenture's performance is somewhat not surprise. The company has been relentless in its investment strategy. There's three main areas currently that Accenture is doubling down. One being cloud. Second is product engineering services, which is in line with what they call Industry X. And the third one that is picking up momentum is around sustainability. The first two are certainly the one that are driving a little bit more of a tangible results, especially opportunities around cloud and cloud managed services. But the third one, sustainability, is certainly providing them with long tail opportunities that at least they're quite bullish on sustainability. Acquisitions play a key role for Accenture. The company historically has been spending about $1.5 billion to $1.7 billion on acquisitions. Just this year, they upped it close to $4 billion. I think it actually exceeded $4 billion on acquisitions. They plan to spend on $4 billion next year. So it's certainly capitalizing on that household name status is helping Accenture to drive strong growth. Just this past quarter in 2Q21, their growth was 20.7%. Certainly a favorable compared to a year ago in 2Q, but also the company continues to sign large deal wins. For the first 9 months of the fiscal year, they signed 54 large deal wins with over $100 million in size. So with all this success, Accenture is well positioned to cross the $50 billion in annual revenue by the end of the fiscal year, which wraps up in less than a month, end of August this year. So certainly, if you look at that bubble graph, Accenture stands out. There's the other large vendor, which in terms of the size is IBM Services. Accenture took over IBM's #1 spot in terms of revenue size. And with that growth, it's certainly making it challenging for IBM, but I know that IBM is making some moves to catch up and regain its #1 spot. We'll let Elitsa chime in a moment for that. The other vendor I want to highlight here real quick is Infosys. Infosys is certainly among the growth leaders in our IT services benchmark research. Really a strong alignment between the founders of the company as well as the current CEO, the current leadership is really what's happening. Is allowing the company to maintain momentum that it's started about 2.5 years ago, and now it's paying off. Obviously, investments in portfolio offerings like AI and cyber and Infosys Cobalt, which is their cloud portfolio umbrella, I should say, is really driving the big opportunity for Infosys, and they're sticking to their core value proposition, which is staying on the services supply side and really be good at executing and staying and making sure that they're executing with the quality that buyers expect. So those two vendors, in terms of a growth, are want to kind of highlight quickly, and I'll turn over to Elitsa to provide some color on IBM and some other vendors as well. Elitsa, over to you.
Thank you, Boz. Yes, the second largest bubble on this graph is IBM. If we can move back to the bubble graph, please. IBM Services in green, very close. I mean, Accenture is $4.6 billion in size, annualized revenue. IBM is $42 billion. IBM has been under constant transformation and under pressure to improve revenue growth and increase profitability so it can shift over to the right side where Accenture is. And it's using a strategy to expand in hybrid cloud and AI. And this strategy is working in the IBM Services segment as IBM Services is increasing revenue in those two areas. However, overall growth for IBM Services and profitability has been declining as traditional infrastructure services were on the negative side. So IBM was pushed to restructure and to spin off the managed infrastructure services activities into a new company, Kyndryl. So giving the independence to Kyndryl will improve its revenue and profitability profile, and we'll see a new vendor emerge on the bubble graph soon. Towards the end of the year. And post-spin-off, the new IBM Services that will remain within the scope of IBM will be half in size in terms of revenue, but will improve its growth and profitability as it expands in higher value and high growth areas such as hybrid cloud and AI. The other vendor that I wanted to call out, we don't see a bubble here, it's Capgemini because it's way out of the scale. So we provided just an arrow for it. Revenue growth in terms of trailing 12-month growth in 1Q21 benefited from the Altran acquisition. The acquisition was integrated in April, so effectively as of 2Q21, there's no more acquisition effects. But in 2Q21, Capgemini recently reported the data, and it actually increased the revenue by 13% organically year to year. And it's driven by portfolio expansion and talent development around 5 growth segments, such as intelligent industry, customer first, digital and cloud, enterprise management, and the new topic of sustainability. So those segments are pushing revenue growth pretty much above pre-pandemic levels in 2Q21, and Capgemini is very optimistic about its performance in the coming quarters, and it even increased its revenue growth and profitability guidance for the full year with its earnings release in 2Q21. I want to let Kelly and John provide examples on their vendors as well.
Thanks, Elitsa. One example I wanted to call out here was around Aeon Hewitt. Looking at its position relative to the other vendors, it's a little above the average, but the company had announced a merger with Willis Towers Watson back in March of 2020. At the end of July of this year, so a few weeks ago, they had actually announced the termination of the merger following the litigation with the United States Department of Justice. So the merger, the purpose of it was to help strengthen Aeon's portfolio around retirement, risk, and healthcare offerings by adding on the expertise from the merger. Following the termination of the merger, Aeon Hewitt would likely benefit from partnering or acquiring with a different firm that kind of brings some of those processing capabilities as well as the industry expertise to support growth around cyber, health care, and risk. For example, Aeon could partner or work with or even acquire Conduent, which would add some of those business process solutions while also providing a base around traditional IT services, including the mission critical services. So it would align well with a lot of Aeon Hewitt's core strengths, such as around the insurance, the retirement, and the health areas. And it would help them to better compete within that space for those engagements, creating more platform and IT modernization engagements. It would also have better footing to compete more effectively against its IT services peers. One other quick example I want to call out was around T-Systems. Its positioning on the map is last, if you look at it in a number perspective, where both profit and services growth is way down relative to the peers. T-Systems has been undergoing internal transformation to help generate profit and stabilize its revenue declines from its legacy business in favor of some of its cloud, security, and SAP services. The core thing I want to call out with T-Systems is that its profitability will likely stabilize in 2021, generating income from operations, very slight, but still it would be generating profit. However, looking at revenue, the company will not likely experience sustainable growth and over the next 3 years as it continues to invest internally and kind of shift away from shift the nature of its legacy services and generate revenue that way. But John, I'll let you call out some examples here as well.
Thanks, Kelly. So I will just give a quick look on DXC, another one of the laggards in our chart here. DXC has been undergoing turnaround efforts seemingly since its inception in 2017 as a result of a spin-off merger between HPE's enterprise services business and CSC. And since then, the company hasn't actually registered year-to-year organic revenue growth, and performance has been fairly hard to gauge due to a number of acquisitions it's been making over the years, further spin-offs such as Perspecta in 2018, which was its U.S. public sector business, and divestments that we're seeing happen right now as a part of new leadership's restructuring approach. So that's kind of, and those those divestments that are happening now are largely responsible for some of the year-to-year declines that we're seeing. So that's kind of the quick look at this graph and why they're lagging behind their peers, but it doesn't fully tell the whole picture here. They do have new leadership under Mike Salvino, who joined in 2019, a former Accenture leader, and like I said, they've since undergone some restructuring to address a few key areas to go forward as the new DXC has been their mantra, namely establishing better relationships with its employees as well as its clients. The old DXC had developed a bit of a poor reputation when it came to resource management. One factor was certainly trying to drive lower costs and improve its margins through automation, but not necessarily executing on reskilling or upskilling its workforce. So the culture and attrition was an issue that they have done well to address by leading workforce surveys, investing in training, engagement, and especially health and wellness throughout the pandemic, overall trying to improve the employee experience. And similarly with its clients, the new leadership completed a review of the top 200 accounts to address some of the issues around, they were expanding into some new areas, so their legacy services, clients that were receiving legacy services, those relationships were strained. So they actually did unlock some new opportunities to renew business and upsell services and overall regain trust with its install base generally. And another key objective happening that I touched on, DXC did carry over a lot of debt from the initial merger, and so strengthening its balance sheet has been a priority, which it's doing through these divestments it's making, and really just focusing on its core services strengths. The big divestment it made in 4Q20 was a $5 billion sale of its U.S. state and local health and human services business, which was contributing about $400 million quarterly, and did have a fairly significant impact on its revenue. But at the same time, it's enabling them to, like I said, reinvest into the business and bring down some of the debt, which will ultimately help it in the long run. So overall, it's been making some of the changes it needs to establish a clearer value proposition and focusing on some of its core IT outsourcing and infrastructure strengths, and really just pursuing some partnerships to get itself deeper into the areas where it's already strong. They did grow sequentially in 1Q21, and we'll have results later tonight on their 2Q21 earnings, which my colleague Kevin Colopy will be publishing the initial response for tomorrow. So that will actually bring me into a good spot to move to the next slide, where we'll be covering some of the service lines. So for this, I want to call out IT outsourcing, and just to take a step back, we primarily traditionally have looked at and analyzed the vendors that we cover through a service line lens. So the one that I want to call out this quarter is IT outsourcing, and as you'll see, it was the only service line to decline this quarter. It declined 2.2%, but that was a deceleration from about 4% in the year before. Overall, the commoditization of services in this segment really continues to contribute to pretty intense price competitiveness and ultimately growth challenges for the majority of its vendors here. But at the same time, what we saw in 2020 was sort of an interest from clients in revisiting core operations transformation, really enabled by cloud and the scalability and resiliency that it provides. So this opened up some opportunities for vendors that leverage low-cost labor bases and, of course, legacy strengths, strong automation frameworks, and the cloud and application capabilities, particularly like the India-centric vendors. These types of vendors have been able to win some large, not just operations support contracts, but run and transform engagements. And that's sort of what puts DXC actually in a good position since it began refocusing on, its legacy areas shortly before the pandemic began. So for some vendors, the legacy services offer a pathway into into the broader digital transformation initiatives around cloud and cloud-based AI analytics and AI and security, needing to secure these environments, provided that they're investing in the right capabilities and deepening partnerships like Kelly alluded to earlier with their cloud and their software providers. But on the other hand, there are some vendors that are opting to move away. And Elitsa has mentioned IBM. I believe she has a couple examples here to support that. But if not, she will be tackling the vertical perspective after this. So I'll hand it over to Elitsa.
Thank you, John. Thank you. So definitely, yes, the incumbency with clients is one factor that plays well into cloud expansion, and this applies to IBM. But then the spin-off of Kyndryl and the establishment of a specialized company that works in the managed infrastructure services space will alleviate the burden from IBM services and enable Kyndryl to pursue its own go-to-market approach, invest in specialized capabilities and automation, in specialized delivery targeting managed infrastructure services to grow the business profitably. Another vendor that expressed challenges in classic infrastructure services was Atos with this earnings in the past week earnings. With cloud adoption increasing over the past year significantly, it kind of cannibalizes the traditional infrastructure services. And in 2Q21, Atos saw declines in its classic infrastructure services and in unified communication services, which spilled into a drag for the company's overall revenue growth in 2Q21. So Atos is reassessing its model and is gradually trying to now move away from the two commoditized and low growth, low profit areas, which together account for 20% of annual revenues. And the company is planning to rely on specialized partners to handle these specific activities and to remove the financial burden from Atos so that Atos can then ramp up activities tied to accelerated cloud adoption. So we'll definitely see shifts in the ITO space, and we're going to keep tracking revenues going forward as we usually do, and we'll provide an update. I want to move on to the next slide, which shows a summary of our industry deep dive this quarter. So Boz introduced earlier our new approach. We're always looking for ways to enrich our products and increase value for our clients. And while the IT services vendor benchmark remains organized by service line and by geographies, this quarter in 1Q21, we added a new layer of analysis, which is centered on one industry sector, and we were looking for a sector that's notable. Some changes happened over the past quarters, and we identified industrial solutions in manufacturing and automotive. So we have three subsectors within that group for our deep dive. Now, we selected 16 vendors out of the 30 IT services vendors in the benchmark, and we analyzed their performance and investments. So this slide is just a snapshot. There's more in the actual report. The industrial solutions and manufacturing sector accounted for 19.5% of revenue in 1Q21 for those 16 vendors and ranked the second in size after financial services. This sector was one of the hardest hit by the pandemic in the past year, and you can see it clearly on the graph on the left side. Revenue growth slumped to a decline in 2Q20 and 3Q20. The declines were due to country lockdowns across the globe. The lockdowns caused major supply chain and production disruptions at the onset of the pandemic. Enterprises that operate in the sector actually weathered the worst of the pandemic through 3Q20, and at that time made the necessary run the business changes to improve operational efficiency and reduce costs. So into 4Q20 and after 1Q21, IT services vendors evolve their relationships with clients and are working to ensure workforces are and IT systems are modernized, they're secure, they're digitally enabled, and their operations are resilient, which actually drove that increase in the revenue growth trend line over the past 2 quarters. In 1Q21 and now in 2Q21, we're seeing an acceleration in revenue growth in the industrial solutions, manufacturing and automotive sector. Vendors are investing in digital twin solutions to enhance their supply chain capabilities. They're investing in digital sales and marketing, and in AI and machine learning capabilities to offset any pressures that come externally. COVID-19 disrupted global supply chains and forced participants to seek alternative channels to either reduce transaction costs and enabled by blockchain, or transform IT infrastructures by migrating applications to cloud so that they can offset the technical debt and diminish financial pressures. Some of the vendors had the opportunity to gain a prime position in the sector, and we saw 6 of the top 10 revenue leaders in industrial solutions, manufacturing, and automotive accelerate revenue growth year to year in 1Q21 when compared to 1Q20. For example, Accenture is gaining traction with manufacturing clients by helping them improve operational technology security and discrete manufacturing processes to optimize efficiencies. Accenture is also investing in developing, integrating, and connecting smart devices that help the company drive Industry X-centric sales and extension into broader consulting and systems integration services around analytics and AI. The acquisition of Ultron in April 2020 expanded Capgemini's capabilities and revenues in the sector. And in January 1st, the company established Capgemini Engineering, which is a new global business line and brand that includes 52,000 engineers and scientists and provides R&D and engineering capabilities. And actually, with this new quarter, manufacturing sector, which was declining in the past year, now saw a return to pre-pandemic levels of activities for Capgemini as clients started to pursue digital cloud and intelligent industry transformations to make operations and supply chains resilient, and to begin to pursue new models of revenue growth. So engineering services is in a positive direction versus in the past year when it was declining because the manufacturing growth was challenged. I want to take a pause here and turn it over to Boz to talk about TBR's industrial IoT market landscape.
Sure, thank you, Elitsa. I think a couple of points to kind of tie into what you were just discussing and some of the examples you provided about like Accenture and Capgemini. So the industrial IoT market landscape is, we just did an annual report back in June. The report is going to be a semi-annual report, and we're really looking through the lens of multi-enterprise business network, where we have discussions around the technology value chain, business value chain, industry use cases, really the voice of the customer, and trying to tie it all together. But I think the important element here to just to kind of highlight from the, some of the findings of that report we just published is, for the market, for the industrial markets to mature, the ecosystem design must be at the forefront of every technology provider, product, and go-to-market ambitions. With the industrial IoT, the technology firms pursuing growth will be really required to work with entities outside the traditional IT backgrounds. And we heard Accenture and Capgemini good examples of building out footprint in the OT department and really forging relationships with operational technology specialists like Rockwell and Siemens and Honeywell and players like that can serve as the entry point into customer and IT environment. So it's really about bridging into non-conventional IT buyers and understanding the complexity that inherent in the industrial technology architectures will be key. Developing some common taxonomies, common language to address those common pain points and bridging the IT and OT, because this relationship remains asymmetric. That will be the key for vendors to be, if vendors that are able to bridge that relationships, to be the one that will be the most successful, especially in those industrial verticals. And we see some of those vendors making investments mostly through acquisitions, because that's the specific talent, specific knowledge that they need to build. So there's a lot more in that report. I just want to kind of quickly touch upon some of the key findings and the need for understanding and building relationships beyond IT, and understanding how the ecosystem has to be designed and managed. Let's move on to the next slide, which is really, I want to kind of touch base real quick on digital transformation. So the next couple of slides really talk about the first one, and this is some of the highlights from the Voice of the Customer report we published in May. On the left side, we kind of highlight some of the key priorities and key opportunities for the buyers and where they are investing. And on the right side, obviously, how a vendor is reacting and what are the implications of their business model. Certainly a very dynamic kind of a relationship going on. Cloud remains the main technology driving digital transformation investments. Those buyers and vendor relationships are entering the next phase, the way we see it, where the parties must account for new ways of engaging and delivering, and opportunities to really pivoting from projects to products. That's how we see it. We hear from the buyers. The majority of buyers continue to prioritize. Obviously, they run the business projects with a focus on cost optimizations. And this trend is really playing in buyers' favor, especially for the past decade. Many of those buyers have felt the pace of innovation, which was obviously heightened by the ongoing introduction of new technologies, have further increased the complexity of the IT stacks. It has been somewhat overwhelming for many of those buyers, and to a degree confusing, I should say, and it's been challenging them to juggle all their priorities. So the COVID slowdown gave an opportunity to absorb and see where they should prioritize and how they should be thinking about what's next for them. So that COVID disruption allowed them to play catch up in the investments in the cloud-ready software infrastructure offerings, which give them the framework needed to operate their businesses and services and service their end consumers through those omni-channels. What was the impact on the vendors? Vendors are now facing really the dilemma, choosing between being a compassionate partner and going with the pace of the buyers, or by continue to support their priorities, or finding a way to dial up the engagements and bring innovation back at the forefront of the discussion, knowing that such a tactic will quickly turn them into turn off clients, essentially, and they can be viewed as too pushy. There's a very fine line, especially as buyers are recovering from COVID downturn. The right choice is an internal battle that vendors will continue to face, and they must solve, especially as focusing on being a compassionate partners will help vendors provide a steady stream of foundational revenues. And we see that with some of the better vendors, the better performing vendors, I should say. They are securing their foundational revenues, and they're building up that quality execution momentum, focusing on innovation that could help them leapfrog competitors should innovation teams be able to convince buyers to pursue new initiatives. We believe the vendors actually that have maintained strong innovation capabilities previously deployed through in-person workshops and innovation and design hubs now have an opportunity to transform these offerings and utilize them beyond business development activities. Obviously, thinking about hybrid, embedding virtual workshops when delivering a project reaches a milestone could help services vendors not only to capture client feedback, but also increases awareness across a broader portfolio offerings, especially as these new areas emerging, and they might be more suitable. So it's kind of having someone like embedded and somebody like not using those workshops as a front-end business development, but really touch points and making sure that everything is being delivered and executed, and that could serve as the next opportunity, the next wave of opportunities for the vendors. Additionally, vendors, we see them that can act as a compassionate partners, so they don't lose business, but they can also handle the pressure from the technology partners. So there's a lot that services vendors have to juggle as they think about what's important to the buyers, and especially when it comes to innovation. Services, obviously, we talked about digital exhaustion, digital burnout. That's something that services vendors must account for. It's not an easy juggle, especially we see attrition starting to climb up as we're going into the second half of 2021. So there's a lot to consider developing those market-aligned roadmap for the future of work, including how vendors will engage with clients and partners and how to deliver the projects from virtual, in-person, or hybrid environments will likely be the biggest challenge for the vendors. Obviously, the good news is buyers are facing very similar challenges in terms of staffing, in terms of portfolio retooling and investments, and how do they manage their own end consumers and so forth. So at least for the time being. In the long term, though, the services vendors have the role to shepherd all the community participants, so they have to really lead the way. And they also must be careful with what are the promises that they make, especially the publicly traded companies with the 90-day sales clock from Wall Street. So there's another kind of a caveat there as well. Lastly, I mean, in terms of when it comes to the vendors, need to prepare and employ different sales techniques post-pandemic, and we start seeing some vendors thinking about how to engage and who's sitting on not just of the channel that they're using from engaging with buyers, but they also must account for the shift in the generations, because we're starting to see a new generational shift in the buyers. So engaging with these upcoming leaders will require vendors to align their own consultants and sales bench priorities, incentive plans with the environmental and like ESG initiatives to begin with, so they can share priorities. So a lot of moving pieces, as I said. The relationship is entering that next phase. So some of those are some of the findings that we gathered as we were talking to many of enterprise buyers. And I want to touch quickly on the next slide where some of the pockets of immediate opportunity that we saw from some of the other research. So if we can just move on to the next slide, please. Those are examples of two of the benchmarks I mentioned earlier in the presentation, digital marketing services on the right side and analytics and insights on the left side. As you can see, both markets are have rebounded successfully into 2021. The analytics services revenue growth accelerated across all service lines as vendors benefited from a favorable year-ago compare, but also a lot of vendors kind of gained the ability to capitalize on the broad-based demand for optimizing IT operations through cloud-enabled analytics enhanced solutions. Many buyers are adopting the mindset that AI is not just for fixing a task or a process. It's about embedding AI as a, that big umbrella that will enhance that cost optimization. There's some, certain drivers across each of the service lines, but, one of the service lines that grew the fastest was obviously the consulting. There were threefold of opportunities. First being the advent of emerging technologies such as AI, quantum, and edge, and which largely analysts wrapped existing software, helps improve the accuracy of big data, accelerate the time and insights, and drive business outcomes. The second is to build trust in these systems. Big Four management consultants have focused on establishing compliance frameworks, which is another opportunity area for many of the vendors. And the third is the sustainability, providing another set of opportunities for consulting. So just want to quickly touch on the analytics side. On the digital marketing services side, the market rebounded. Advertising and marketing spend is increasing for many of the brands that we're talking to. After slowdown in 2020 due to COVID, the market is set to grow double digits again through 2025. Actually, we just published before this webinar the latest benchmark and the forecast that's part of it. We're expecting the market to reach 133 billion by 2025. What's driving that market? It's really about AI-infused customer experience offerings will enable vendors to alleviate the pain points around brand transformation. But only the vendors can pivot away from developing static solutions and provide a conduit for brands that connect with end consumers through emotional intelligence-based messages. So we expect a new wave of opportunities stemming from the emergence of common frameworks, including sustainability and diversity and inclusion, certainly to be another channel for growth, just like in the analytics side. So a lot of moving pieces there in those two markets. I just want to kind of quickly touch upon where we see short-term growth for not just those markets, but that will how we impact the broad digital transformation. So we only have a couple of minutes left, so I want to open up for questions. We have a couple of slides that we want to kind of quickly, you guys can see the coverage, and maybe just move on to the next slide, please. This is for IT services benchmark. And then the next slide, please, is for digital transformation research. Some of those reports we talked about through today. You can certainly gain more of this coverage schedule on our website, or you can guys contact us directly. But it's just want to open up for some questions before we can wrap up. So let's see. I see. Okay, slide 10. A question here. Slide 10, opportunities of pivoting from projects to products. Could you explain that, please? Yes. So really, what we are seeing from the market standpoint, some of the vendors, and I think PwC is a good example there, how they're trying to productize their knowledge with the launch of PwC products, and they push into SaaS-based offerings and really trying to monetize their knowledge through SaaS-based offerings. Some of them have industry flavors, some of them are very much horizontal capability offerings. So it's something that it's resonating with buyers as well, because it gives them a chance for the vendors to speak to new buyers, like in the mid-market, for example. That's some new buyers that vendors like PwC are targeting, but also it gives them a chance to manage the workloads that they may need. They may not need the entire Shazam of that, from consulting to implementation in many services. They may need a specific offering. So those productization of knowledge is, I think, it's something that we're starting to hearing. There's appetite in the market, and some of the vendors are pushing forward as well. I want to see if there's any other questions. Elitsa, do you see any other questions? Okay, I think, all right, so.
Yeah, so.
Right there.
One question on your bubble graph. You had many legacy IT services vendors, but did not see some of the more tech-oriented, such as AWS, Google, Microsoft. Do you currently track their services revenue? And if yes, how?
Yeah, sure, I can take that one quickly. So the hyperscalers and some of the technology vendors, we do track services, product services research like SAP and Oracle. But for the hyperscalers, for example, we have done some research as part of our digital transformation cross-vendor coverage, where we have looked at the services performance of those vendors. We know that they exist. We know that they are making inroads in certain areas through industry clouds and building out some industry portfolio offerings, but they're very nascent in terms of a size to be included into the IT services benchmark. First of all, second of all, there's just kind of a one service line kind of an offering. So I think where the bigger opportunities for those vendors lives today is their partner ecosystem and how they actually collaborate, how they evolve the expectations in terms of collaboration with the GSIs and consultancies. So that's where I think the bigger opportunities for those vendors are. Certainly, we're not opposed to adding those vendors down the road if they were to develop a sizable professional services practice in the same way as we track vendors like Accenture and IBM and the likes. But at this stage, we have assessed and we have a sense of majority is around cloud managed services and their consulting systems integration. I would say it's very, very little at this stage. So the partner opportunity is bigger for them at this stage of the game. And I think
yes, and I just want to add here.
Yeah, go ahead.
Call out our cloud research. So we have our cloud professional services research and benchmark and specific reports on those hyperscalers. So there's definitely highlights on the services side as well within those publications.
Great. Thank you, Elitsa. And you guys can see our contact information here. So if you have any follow-up questions, please don't hesitate to reach out to any of us. I'm happy to follow up. Thank you again for attending, and wishing you have a great rest of your day.